Gold is a real commodity. There's always a market for gold. At any price, jewelers will buy gold. If gold is $5,000 an ounce, they're going to buy it.
Peter Schiff gives advice on what to do with long-term savings and investment, suggesting options such as buying gold and silver, investing in good dividend-paying value stocks, and owning a business with real assets that can maintain its margins in an inflationary environment. He also shares their opinion on the banking system and government regulation.
Obviously, if you need money in the bank, pay bills, short-term operating cash, yeah, leave it there. But for longer term, don't leave any long-term savings in the bank because you're going to lose it. Either the bank's going to fail or the money's going to fail. But either way, you're going to lose. So you got to take your money out of the bank and do something else with it. You can buy gold and silver because it's much, I think, safer than owning cash. Or you can invest it. That's what I've done. I have both. I have gold and silver. But for myself and my clients, we own good dividend-paying value stocks all around the world. Real assets that are going to retain their value as money loses its value. And if you own a good business that has real assets and that sells products and services that customers need, then you can raise your prices and you can maintain your margins in an inflationary environment and you can raise your dividends, which is what I'm counting on. And since the income that the companies that I invest in are earning is coming from outside the United States predominantly, so it's coming in other currencies, which I expect to rise versus the dollar, then my dividends will go up for that reason as well, as you translate them back into cheaper dollars. All that regulation. And the regulation completely destroyed the banking system. We would have a much sounder banking system if it was regulated by the free market instead of by the government.
Peter Schiff discusses the potential of gold-backed currencies as an alternative to fiat currencies and Bitcoin. He explains how government regulations act as a barrier to entry and how gold works great in the free market. He also argues that Bitcoin is not a viable alternative as it is tokenized nothing, making it difficult to buy things with it.
Gold-backed currencies. We have the technology to do that right now. The biggest impediment is government regulation. Anti-money laundering, security regulation, all these government rules and regulations act as a barrier to entry because the government doesn't want competition with money. They want to maintain their monopoly on money, and their product stinks. It's fiat currency. It's backed by nothing. It's no good. The free market's alternative would be gold, which works great. And now with the internet and blockchain, it works better before because it's very easy to tokenize gold and then have those tokens available to the public to use as a medium of exchange, as a unit of account, as a store of value, as money that would be much more efficient in every single sense of the word than dollars or euros or yen. And so that's exactly where we should be going. And I would applaud that. In fact, I'm going to be working to make that happen to the extent that governments don't prevent it because they might. They could use their power and they have all the guns, right? They have stopped the competition to preserve their monopoly and their ability to flood the world with their lousy fiat. Look, the problem with Bitcoin is you've tokenized nothing, right? So at least with gold, you tokenize something. Bitcoin can't work. Yes, as long as there are people foolish enough to buy it, the price could go up. But eventually the people who are buying it are going to want to sell it because they don't want their Bitcoin. They want to buy things. They want to buy a car or a house, take a vacation, buy food. And the farmer doesn't want Bitcoin. The guy that's selling a car doesn't want your Bitcoin. So in order to buy anything with Bitcoin, you got to sell the Bitcoin. Now you need somebody else to buy it. If you run out of buyers, the whole thing implodes, right? That just like any pyramid or chain letter. I call it a blockchain letter. It's the same principle as a chain letter.
Peter Schiff discusses the advantages of gold over Bitcoin and predicts the downfall of institutional adoption of cryptocurrencies. He highlights the demand for gold as a real commodity with actual properties, while Bitcoin's only property is that people think they will get rich buying it. He also mentions the possibility of bankruptcy for many crypto companies and believes the current rally is driven only by existing crypto investors.
Gold is a real commodity. There's always a market for gold. At any price, jewelers will buy gold. If gold is $5,000 an ounce, they're going to buy it. The electronic industry needs gold. If it's $5,000 an ounce, they're going to be buying it, right? There's always going to be buyers for gold. And central banks around the world, if I'm right, they're always going to be accumulating gold. They need gold as a reserve, especially if they move away from the dollar. So you always are going to have demand for gold. There's been demand for it for 5,000 years. It's because of its actual properties as a metal that it's so valuable. Bitcoin's only properties is that people think they're going to get rich if they buy it. And they can only get rich if they buy it if there's a greater fool willing to pay a higher price. On for a decade, but it's gone on longer than the tulip bubble. It's setting a record in longevity, but it's still going to end in disaster. The reason I think that the institutional adoption is over is because I think that was big in 2021. They got in at the top. The institutions put their toe in the water, $40, $50, $60,000 Bitcoin. And they don't like the temperature. Even though it's come back to 30,000, they had to ride it down to 16,000. I think they're gone. And now all the new rules and regulations that are coming on to the space, and I think a lot of these crypto companies are either bankrupt or headed for bankruptcy. I think the bloom is off that rose. I think the institutions that dip their toe in the water are not going to completely go in, done. And I think those that didn't put a toe in the water are glad that they didn't. And they're never going to go near there. I think all of the rally we're seeing now in crypto is coming from the people who have been in crypto the whole time.
Peter Schiff discusses how some countries, particularly China and Russia, are moving away from holding US dollars as their primary reserve and towards holding gold instead. He argues that gold is a better asset because it is not someone else's liability, and therefore cannot be sanctioned or taken away. He also suggests that the world may eventually return to a gold-backed reserve system similar to what existed prior to 1971.
They never really needed the dollar. They needed it like a hole in the head. They put themselves into a position where they needed it, but now they are extricating themselves from that position so that they no longer need it. They never really needed it, but they were using it anyway. But we gave them a number of reasons to get out of that position. And they would be much better off if they held gold as their primary reserve rather than US dollars. And remember, prior to Bretton Woods, all the countries held gold. That was everybody's reserve. And then when Bretton Woods came around, the reason that everybody decided to hold dollars was because the dollar was backed by gold and convertible into gold at a set ratio. Every $35 got you an ounce of gold. So if you were a foreign central bank and you held $35, you held an ounce of gold, right? And we were on that system until 1971. And then the U.S. defaulted on its commitment. And so for 50 years, we've been on this crazy fiat system. And I think it's coming to an end. And I think the world is going to go back to what existed prior to 1971, which is gold being the primary reserve, just without the U.S. dollar as an intermediary. And so these countries are going to have gold. And that's much better because gold is not simultaneously somebody else's liability. It's a real asset. Nobody can sanction your gold. Nobody can take your gold away from you, assuming you store it yourself. So if China and Russia have their gold reserves in their country and the Chinese decide to do something that America doesn't like, America has no retaliation financially. America can't do what it did to Russia and Putin. And so people want to put themselves in a position where they're not beholden to the whims of American politicians. But also, they don't want to have to loan all this money to the U.S. government. They don't want to have these huge trade deficits with the United States when their own citizens would be better off consuming all that stuff themselves.
As we come to the end of this video, I hope you found it informative and thought-provoking. If you have any thoughts or questions about the topics discussed in this video, please leave a comment below. Don't forget to like and subscribe to stay up to date with our latest content. See you in the next one.